Welcome back. Time for Business with Owen Fairclough. Hello again, Owen. Starting off with a dramatic shake-up at Hewlett-Packard.
Yeah, if it's been a bad week for Facebook, Claire, and it has, then it's been a terrible week for the likes of HP and indeed Dell, two titans, if you like, of office equipment. I don't think there's an office anywhere, certainly in the Western world, where there isn't either a Dell or an HP computer. This company, HP, actually beat expectations with its earnings, but they were still significantly down, and it's now nearly 30,000 HP staff across the world who are paying the price for the company's inability to keep up with the likes of Apple. Nicholas Rushworth has the story for us.
The HP TouchSmart PC brings you closer to your world than ever before.
It is a major restructuring. Hewlett-Packard's business is being savaged by the rise of handheld devices such as computer tablets and smartphones. The company's profits in the second quarter slumped 31% to $1.6 billion. Areas of weakness: imaging and printing down 10%, notebook sales down 6%, and server storage and networking also down by 6%. The consequence: 27,000 HP jobs will go by 2014. That is 8% of its workforce. One of the key problems for the company has been instability at the top. The current Chief Executive Officer, Meg Whitman, has only been in the job since September and is the fourth CEO in a little more than a year. Her move to restructure now is aimed at saving the company $3 to $3.5 billion to reinvest in the firm. Job cuts will include an early retirement program and impact nearly every part of the company's business and region. Another computer titan being rendered obsolete by the handheld revolution is Dell. On Tuesday, the number 3 PC maker worldwide reported a 33% drop in quarterly profits.
Huge layoffs, Claire, for HP. Yeah, its share price did end the trading day in Wall Street around 3% down, but actually rallied later on in the day. In fact, shot up around 12% after that news. So lots of investors happy to see that HP is trimming the fat. That will be, of course, no comfort to those 30,000 people who are going to lose their jobs over the next couple of years or so. Just while we're talking market numbers, let's look at the numbers across the Asian markets. The Nikkei well down again this Thursday, around 0.2% down, and heading down to the 8,500 point platform. What does that mean? Well, it basically means we're back to where we were at the start of the year in terms of the markets. The Nikkei is a market that's rebounded strongly in the first 3 months and now just seems to be going right back to where it started at the height of the last Eurozone crisis. Hong Kong and Shanghai following a similar sort of pattern as well.
Right, let's talk about the EU Brussels summit that took place yesterday. The sticking point seems to be Eurobonds or some kind of mutualising of European debt. Why is Germany so against this idea?
We were just saying, weren't we, Claire, what a horrible piece of jargon the word Eurobond is. But set aside jargon, set aside the term Eurobonds or debt mutualisation or debt guarantees. What this comes down to is who ultimately pays for all of this. And the answer is Germany. It's the biggest contributor to the EU. And as things stand with this Eurobond project, this idea of mutualising debt, it's Germany that would play the ultimate backstop, the ultimate guarantor. If we take a look at the figures for something like the European Financial Stability Facility, this is Europe's current bailout fund. If we look at the kind of contributions that European countries make, it's Germany that has to put its hand in its pocket the most. It currently contributes nearly a third of the European bailout fund. You can see France is not that far behind, but significantly it's only chips in around about a fifth of that bailout fund. After that, you've got Spain and Italy as the ones who also pay into it. But Germany is the ultimate paymaster here, and the country that would ultimately have to pay should Greece fail.
So Germany stands to lose the most if Greece were to exit the Eurozone?
Yeah, you've got a country like Greece with around 400 billion euros, according to the latest estimates, of liabilities, those loans from the EU, loans from the IMF, loans that the countries like Germany have helped out with. The problem as well is that Germany is also heavily invested in countries like Spain and Italy. You've got banks like Commerzbank, for example. OK, they're unwinding their position from countries like Greece, but a bank like Commerzbank has around 30 billion euros invested in Spain and Italy, and yet they're supposed to be backstopping the EU as well. You can see why it all starts to get very messy. If the countries that are backstopping the EU are actually in danger of failing as well, you begin to see the contagion effect, which is why Germany is front and centre in this whole crisis.
But it doesn't seem to be saying, no, we'll never do this, just not right now. It has different priorities.
Absolutely. It's a bit of a nuanced position, really. Angela Merkel is not saying no to any sort of growth pact, but basically saying these countries need to get their financial houses in order first. And that's enshrined in German ideology. It's enshrined in German culture. You pay your dues. You don't spend more than you earn. And this is the kind of thinking that is driving Germany right now and is certainly driving a lot of voter thinking in Germany.
All right, now staying with the Eurozone crisis, Spain's government has put the finishing touches to a €9 billion bailout for one of its most vulnerable banks. It's announced it's to fully nationalise Bankia, the firm most exposed to the burst housing bubble. Government intervention might be enough to keep Bankia alive, but as Sarah Morris found out, it's unlikely to soothe the anger of its customers and investors.
Nationalised and about to be recapitalised with public money, Bankia is the latest focus of attention in the Spanish economic crisis. Here we're at a meeting of the bank's small shareholders. The room is heaving, the mood is tense.
They have swindled us on a huge scale.
The association that organised this meeting says 500,000 bank customers were encouraged to buy shares in Bankia when it listed in July 2011. They say they weren't informed of the risks of the investment. The stock's value has fallen 60%.
27,000 euros. That's what my mother has lost. That was our safety net.
They advised us to invest in some shares. We said no to them. But now we find out that without telling us about it, the bank put the whole lot on the stock exchange.
The bank only wanted one thing, to find capital. Who had the information? The bank and the public organisations who did nothing to stop Bankia listing on the stock exchange.
These people think they were conned. The shares were sold as a safe investment. But Bankia is the Spanish bank with the largest exposure to real estate debt, €32 billion worth.
Bankia is the classic example of a problem bank here. They decided to merge a lot of savings banks to fix their problems, and all they did was create larger systemic issues.
This economist thinks there are two types of banks in Spain: the large, well-diversified ones that have gone international and that are healthy, and the savings banks, which he thinks will certainly need an EU bailout.
That was Sarah Morris reporting from Spain. Let's pick up on a little bit more of the day's company news for you now. Facebook is being sued by a group of investors over its chaotic stock market debut. They claim the social network and its underwriters, led by Morgan Stanley, kept them in the dark about the firm's reduced growth forecast. The revised numbers contributed to a 20% slide in Facebook's share price since it started trading, but Facebook's share closed up more than 3% on Wednesday, its first positive finish since it listed on the Nasdaq.
The shale gas boom in the US has helped it achieve a significant drop in emissions. The International Energy Agency says carbon dioxide levels fell by 450 tonnes over the past 5 years, the biggest drop amongst all countries surveyed. The US gas boom has pushed prices to record lows and shifted power away from coal, but its extraction through a process known as fracking has been blamed for causing earthquakes.
And Paramount Pictures has delayed the release of one of the biggest anticipated blockbusters of the year in order to convert the film to 3D. The new G.I. Joe Retaliation movie was supposed to hit screens at the end of June, but it won't now be shown until March next year. Paramount, which made the movie with G.I. Joe toy manufacturer Hasbro, says it wants to cash in on higher box office ticket prices for 3D movies. You'd think they might have thought of that before they made the movie, do you think?
You would think that, wouldn't you? Were you going to go and see it?
I saw the first one on a flight, and being jet lagged, I don't really remember it. I wasn't that impressed. Our producer has just said he will go see it. There you go.
All right. Thank you very much, Owen. Thank you for watching. Do stay tuned to France 24. Louise Hannah will have the latest headlines in just a couple of minutes.